All right, breaking news. The Federal Reserve just decided to cut interest rates by 50 basis points. This obviously is an aggressive stance. This is them sending a message to the market, telling them we are here, we are going to step in, and we are going to stimulate the economy. Already, we have seen the S&P jump, we've seen Bitcoin jump, and gold just hit a new all-time high. These assets understand that cheap capital is going to flow into the market, and if the Federal Reserve is starting off with a 50 basis point cut, that means that they're serious. That we also know that the M2 money supply is expanding. And so anytime that you have the cost of capital coming down, you have more capital coming into the market. Asset prices, which are denominated in dollars, are going to go up. And so having the Federal Reserve step in. Now remember, asset prices, especially stocks, are already at all-time highs. Just yesterday, we got the S&P and the Dow Jones hitting a new all-time high. And then the next day, the Federal Reserve decides to start cutting interest rates and changing into a more quantitative easing regime. And so if asset prices like stocks and others are already at or near all-time highs, and then we get cheap capital coming into the market, you would expect these asset prices to keep going up. Now, from an investment standpoint, what is so interesting about this is, again, in the second half of an election year, we usually get more volatility, and that's exactly what we have seen. There's plenty of people talking about a potential recession, but if the Federal Reserve is cutting interest rates like this, then that signals to us that likely they are only just beginning. The market is now pricing in about 100 basis point cut all the way through the end of the year. We start with 50 basis points, and then we get 25 basis points and another 25. To go from 5.25 to 5.5% interest rates all the way down to 4.5% just in the last couple of months of the year would be a very bullish sign when it comes to stock prices, Bitcoin, etc. Now, one of the critiques of a big move like this is we are less than 50 days away from an election. And so obviously having a big interest rate cut like this is a boom. It's a tailwind for the incumbents. And so Vice President Harris and her campaign have to be very excited about the fact that we just got this big interest rate cut. Now, what I expect to happen here is that there's going to be plenty of people now saying, oh, wait, that recession we were talking about, that is unlikely to occur because we have a soft landing on our hands now that the Fed's going to stimulate the economy. Remember, asset prices at or near all-time highs with no stimulation in the economy, M2 money supply expanding, and now we get this big interest rate cut. That is going to be a very big positive. Now, of course, one other thing to pay attention to is where else are people going to put their money? There's over $6 trillion sitting in money market funds. So these people have run into the corners of the financial system because interest rates were high. When interest rates are high, they get a high yield. As those yields come down, these people are going to look to go back into financial assets. And so that's $6 trillion that's sitting in the money market funds. If all of a sudden that starts to flow back into stocks or other assets, then you can expect that to be a tailwind as well. Overall, I know people are worried about a potential recession, but it looks like the Federal Reserve is all over it. They are going to stimulate the economy. They're going to expand the money supply, and asset prices are going to benefit. And so 50 basis point cut, huge breaking news, much bigger than most people were expecting. And that is going to be a positive shock to the market. The Fed is here. They're serious. They're going to stimulate, and stocks, Bitcoin, and everything else is likely to go up over the long run. That's it. I'll see you guys tomorrow.